Oil prices soared today to levels unseen in almost 30 years after an attack on Saudi Arabian oil facilities over the weekend slashed approximately 5% of global supply. Our benchmark crude, Brent crude, rallying as much as 20% to over $70 a barrel. At one point today, it recovered back to 65.51 by 4 p.m. Singapore time, but still up by almost 9%. Brent crude is now at $66.470. That's up over 10% a barrel. Now, U.S. benchmark WTI prices also soaring as much as 15.5% to touch $63.34 a barrel. That's its biggest intraday gain since 1998. It is now buying at some $60.140. That is up 9.64% in trade. Now, that volatility affecting gold prices as well, a key safe haven asset for investors. It jumped over 1%. It is now at $1,503.910 an ounce. Saudi Arabia is the world's biggest oil exporter ahead of Russia, Iraq and the United States. They're also responsible for supplying over 10% of global crude. That's more than Iran and the UAE combined. Before the attack, the state-owned Saudi Aramco's processing facilities pushed out 9.8 million barrels a day. It's now producing 5.7 million a day. Iran-aligned Houthi rebels claiming responsibility for the attack, while the U.S. administration, well, it has blamed Iran. Earlier today, Iran's foreign ministry condemned Washington's accusation, describing it as unacceptable and baseless. It has also ruled out a meeting between Iranian President Rouhani and U.S. President Donald Trump at this week's UN General Assembly. President Donald Trump, meanwhile, jumping onto Twitter to reassure investors that there was, and I quote, plenty of oil, and announced that he had authorized the release of emergency stockpiles if needed to ensure stable supply. And now for a more in-depth look at this, we're joined in the studio by Dr. Tilak Doshi. He is managing consultant at Muse Stancil. Dr. Doshi, welcome this evening. Good to see you here. All right, for those at home who are watching, can you perhaps explain just how significant this attack on these Saudi oil facilities are?
Yeah, the level of brazenness of this attack, and it is the impact on oil supplies is larger than even the Iranian Revolution or the Iraqi invasion of Kuwait. So the scale of these attacks are just stunning, and the market has just taken its time to realize just how brazen these attacks have been into the epicenter of Saudi Arabian oil installations. That has been a paradigm shift for many of us looking at the Middle East as part of our market observations. So for ordinary people, it's the price impact. We will all feel if prices go up. At this stage, we're still not sure just to what extent will the Saudis be able to bring back production, whether it'll take 2 months or whether it'll be less than that. If that damage, that structural damage to infrastructure takes a longer time, then the impact on oil prices will be most extreme.
On the point of just how quickly we might see production coming back up from Saudi Aramco, what would your estimate be? Would it even be possible to put a guess on this? Because we have been hearing lots of different estimates. Saudi Aramco themselves have said that they potentially could have brought their production back up by a third by today. Is that even feasible?
You know, the data isn't there, and I wouldn't hazard a guess myself. I think we are all waiting for announcements from the ministry in Saudi Arabia, and speculating I don't think will serve any purpose. The key thing is we need more information before we realize just what the extent of the structural damage was to this largest processing center, crude processing center in the world.
All right. So what we do know is that these attacks removed almost all the spare capacity available to compensate for any major disruption in oil supplies. What sort of impact could we see here in Asia, especially for oil importing countries like China, bearing in mind that China is, of course, a strategic it has a storage of oil in reserve, doesn't it?
Yes, yes. And in fact, the large Asian oil consumers, China, India, Japan, South Korea, and of course Japan and South Korea as OECD members do have their requirements for storage. I believe one of the countries has already mentioned that, South Korea has mentioned that they will access that, their strategic stocks if required. But I think there are two factors that we need to keep in mind. One is the price factor affects the whole world. It's one global market, so we are all affected. But for the Asian consuming countries, the large Asian consuming countries, which depend on Middle East oil heavily, and in Saudi Arabia in particular, they may be impacted more severely if the structural damage to infrastructure requires more than, say, 2 months to come back up to full production.
Right.
That's when we will start seeing some serious impacts upward impacts on the oil price.
They may simply just not have the infrastructure ready right now. All right, so let's look at the role of Saudi Arabia as the de facto head of OPEC. Do you think that there is a possibility that they will look to other OPEC members to pick up production from here? And can they? Will it even be enough?
I don't think so, primarily because there is very limited spare production capacity. What spare production capacity there was primarily held by Saudi Arabia itself, an estimated 2 to 2.5 million barrels per day. So there really isn't very much of an issue with respect to spare capacity in OPEC. I think what has calmed markets already is the fact that OECD inventories, strategic stocks, are ample, and up to now, up to this point in time when the attacks occurred, most of the market was worried about oversupply and a slowing global economy. Now, we will only be able to see what the final impact is after we know more about the damage and the rate at which that production capacity can come back on stream.
All right, so going back to the point of the extent of that damage.
Exactly.
The attack has had material sort of ramifications on world oil markets. What measures do you think can be taken now to calm the markets in this situation? Are there any? Well,
some of those have already been made, like President Trump's announcement that he authorized the US SPR, the Strategic Petroleum Reserve, to act as necessary. That calmed markets, and most observers suggest that the intraday high was brought down by that announcement. The fact that their OECD stocks are ample and the global economy is weak, so the background concern has always been weak demand and ample supplies. This attack on Saudi Arabia has, of course, upended some of those assumptions. And I think to sort of sum it up, I think the point is the psychological effect and the risk premiums that oil prices will carry with them from going forward. That security risk premium, maybe the world markets were a bit too complacent. We all assumed that Saudi Arabia represented a stable source of supply. This attack and the utter brazenness of this attack has put those assumptions to rest once and for all. So that has brought us in, it's a paradigm shift. It has brought us to a new stage where the risk of escalation between Saudi Arabian-Iranian conflict with the US in there as the major power is the fear for most of us observing oil markets. Just what will this lead to in terms of a tit-for-tat kind of impact?
It would certainly appear that we are in uncharted waters with this one. Dr. Doshi, thank you very much for coming into the studios and sharing your insights with us. We've been speaking there to Dr. Tilak Doshi. He's managing consultant at Muse, Stancil.